What is going on today, YouTube? I hope you guys all had a great week, and today I'm going to go over what trades I made for the previous week and what I see potential in for the upcoming week. If you're new to my channel, I make daily stock market videos just trying to teach you guys things I wish I knew when I first started. So if you like this kind of content, subscribe to my channel, leave a like on the video, comment below if you got any questions, and share it to someone else. Alright, last week, we'll go over my trades. I'm going to pull up the screenshot. Those were all my trades for the week. Actually, it was just bought and sold NUGT, bought and sold DRIP, and I am just in a current position Gush right now. I'm going to tell you guys what my mistakes were, and I had a red week this week. But not too bad. It wasn't too bad. I followed my rules, cut my losses quick, and that's just how you got to go about it. Alright, so, for my trade on NUGT, if you watched my previous video from the week before, I got in around this 25.20 mark. I got in at 25.20. And then I didn't have a stop loss set because I really thought this stock was going to bounce back up because it trended down, bounced off this line, came up, came back down, had a green day, and I thought it was going to keep on going, but it did not. Had this red day, had this red. I didn't get out until 3.7. I got out. Overall position lost me with commissions and all about 54.70. Now, so you guys can learn from this and don't make the same mistake. Just because you break above and you have this one big red or green day doesn't mean this thing's going to keep on going up and up and up. You need to wait, make sure it confirms this line and it doesn't keep going lower like it did. So don't rush to get in these too quick. I just rushed to get in it too quick and that's where I screwed up. It would have been better if I bought down here. Would have had a decent return if I did that, but hey, I messed up, so I'm going to learn from it and not get in these as quick as I did. My other trade, this drip stock, I was right about it, but my stop loss was too tight. I got in this stock because I noticed a little pattern. Every time it had 3 red days, it had 2 green days. 3 red days, 2 green days. 3 red days, and I saw it had its first green day. So I figured it was going to continue that pattern of 2 green days, which it did. But I had my stop loss set too tight. Had my stop loss set at 13.57, and that day I would have actually profited if I kept in, but you can see that it went the whole way down to 13.29 that day, so my stop loss got filled. So from now on, I got to make these not so tight. I need to just let it play the pattern and not worry about the day fluctuations. If I would have did that, I would have had not a great profit, but I could have made about 3 or 4%, and then I was only banking on the 2 green days, so I would have got out at the end of the day if that stop loss didn't get filled. So I would have had about 3% gain. I wish it did more, but I was just following that pattern. And my current position, I took a current position on Gush. I got in this stock at 22.87. I got in on March 9th, 22.87. I bought this stock because I could see a little uptrend right here. This stock keeps on making higher lows. And every time it's making higher lows, I see potential. And I think this stock's going to keep on going. So I got in, and I'm hoping this stock can go up to here, and I get about a 25% gain. And that'll be one of my biggest trades of the year. My biggest concern right now is getting past that $24, around that $24 mark though. It seems to have high resistance right here. It keeps on bouncing and coming down, bouncing and coming down. So if I see it go up on Monday, and it's still holding right here and can't get past this line, I'll probably end up selling. I'll get a small little gain out of it, and we'll see. So overall in the week, I lost about $65.60 total, but I'm up about $30 on this Gush position right now. So overall, I'm down about $30. And I'm still green on the year, so we're going to keep on going. I'm going to keep teaching you guys how to trade this small account. With a small account, I want to make sure my losses aren't too drastic, so I still have money to trade with. That's why I'm not as willing right now just to let these stocks ride out. Like that NUGT, I got in too quick. So take that note. Don't get in too quick. Wait for the confirmation and then play it out. It's better to have this confirmation than just to get in quick because you think it's going to go up. It didn't even have an uptrend yet. It was so flat. I should have waited for this uptrend on this line and then took a position. Like over in here. Wait for that uptrend and then take your position. So anyways, learn from that. Don't make the same mistake as me. And for this upcoming week, I see a lot of potential in JDST. On JDST, you can see it's getting higher lows. It's been taking higher lows. And right now it's kind of getting squeezed. It keeps on hitting around this $58, $60 mark. So as long as it can keep on trending up, I mean, even if you want to take a position at $60, you're looking for like a 10% gain if it goes up to this next resistance. And if it can go the whole way up, you're looking about a 30% gain. So right now, if it crosses the $60 mark, I might look in taking a position off of this. But if it doesn't fit your pattern, doesn't fit what you guys want to do, don't trade it. Just watch these patterns, watch how they play out if you don't want to trade right now. And another reason that I see JDST is because looking at its inverse, JNUG, it is doing the exact opposite. It keeps on hitting off this bottom of $13. So I'm hoping eventually this breaks, hit off that bottom, and it'll keep on falling more. And you can see this keeps on trending down. It's downtrending stock. So JDST is trending up, JNUG's trending down. Wait for my confirmation above that $60 mark, and I might take a position. But the one reason why I think this is more risky to take a position once across the $60 mark, I still like more trading when they hit like bottoms, when they hit their lows. When they match their lows, like back here, I see a lot less risk and a lot more potential, but see how this is still trending in the middle of the overall low and high. So it's a harder trade to make, and you don't know if it'll fall or go up. UGAZ is another one I'm watching right now. UGAZ is going up. It's having a little heart. Look, see how it's hitting this resistance line. It passed it, but now it's almost trending back down below it. So if it can hold above this $60 mark, you could look at a potential for another 33% gain if it's going between those support and resistance levels. So right now it's hitting off that 60. If it can continue to trend upward, that's a trade I'll be looking into too. And UGAZ's inverse, DGAZ, is showing the same thing. If it can bounce off this resistance level and keep going down, then that's going to confirm that UGAZ is going to go up. But I have to wait for that confirmation to see it trending back up before I would take a position in this, because I don't want to invest in something that's going down. And now, just for a couple stocks, not just ETFs, that I'm going to watch this week. CRBP is a big one because you guys can see it bounces in between these support and resistance levels all the time. Between like this $6.75 mark and this $8 mark. Right now, it hit off that $6.75. It's just crossing over that EMA. So if it can continue on an upswing, that's about a 10% potential for profit. And they also, one thing to watch for, they have news coming out. They're going to present at a healthcare conference on March 14th at 8:40 a.m. So this stock might just go up off of expectations for them to have good news come out at that health conference. They have good news come out, the stock could really go. But it's dangerous to hold through news sometimes. Sometimes it's better just to ride the wave up for the news and then get out before the actual news comes out. Because if it is bad news, the stock could really, really fall. But if it's good news, it could go the other way. So it's a high-risk play. A couple penny stocks I'm watching. In case any of you guys are interested in penny stocks. I'm watching DRYS right now. Just because you can see it kept on hitting off this like 380 mark. Kept on bouncing off, coming down. Bouncing up, coming down. Bouncing up, coming down. And it finally broke past that 380 mark. So this thing's really ran in the past. It might keep on going. It might really run. And you can see they're a really small company, but they actually pay dividends already. And their earnings have significantly went up since last time. EBIO, another stock I'm watching. Same thing. Out of this 6-month period, it keeps on going up, then it consolidates, goes up, past this high, then it dropped back down, and right now, it broke, and passed this high again. With these little penny stocks, I would never say just buy them. You need to look into their SEC filings, and you need to figure out if they actually have good value or not. But sometimes, if you're a trader and you're just looking to make a quick profit, a lot of times, day traders will look at this. When they reach new highs and they keep on going, it seems like a good time to make a quick profit. Like as soon as that stock broke that 110 mark, it went up 13%. So that's just a key thing traders look for. And I told you guys in other videos, it's like a psychology game down here. When these stocks break new levels, people buy them and expect them to keep on going like to the moon. Like they want to get the next Microsoft basically. 9 chances out of 10 that's never going to happen. But there's a lot of potential in these smaller stocks just to ride the momentum and make a quick profit and get out before they fall back down. Because you can see they go up and they fall right back down. They go up, fall down, go up, fall down. So you never know about these. They're high risk plays. That's why they're penny stocks. They don't have good SEC filings. They don't have good SEC reports. There's little known about the company, and that's why they're high risk. And the last one I want to bring up is JMEI. JMEI, it's the same thing. It's made a run in the past. And right now, it kept on bouncing off that $3 mark, and it finally passed it. You can see when it closed that day past $3, it opened the next day higher and rose 7-10%. So that's what I'm talking about. When these stocks break their highs, they tend to shoot up because a lot of people just go into them because they're breaking new highs. If this content helped you at all, leave a like on the video, comment below if you have any questions, and share it to someone else. And if you like this kind of content, subscribe to my channel. I make daily stock market videos just showing you guys stuff I wish I knew when I first started. And I will see you guys tomorrow.